All right, hello everyone, and welcome back to another video here by R Trades. We're going to talk today about avoiding trying to find the low, not trading reversals, trying to trade in the direction of prevailing trend. We're first going to have a look in this video at a few pages of The Best Loser Wins by Tom Hugard. Then we're going to talk a little bit about some of my thoughts on it, as well as trying again to trade in the direction of the prevailing trend and why that is so important. Guys, before we get into this video, I want to let you know that Apex Trader Funding is a prop firm. What does that mean? That means you can trade simulated accounts and make real money payouts for a lot less. Apex Trader Funding tends to also be the cheapest prop firm that you can find out there. If you are interested in using Apex Trader Funding, my affiliate link is in the description box below, and it's all over my X account as well. Okay, guys, with that being said, futures comes trading in futures and any derivatives comes with substantial risk, including losing your initial capital or any money that you put into the market, guys. So be very careful when you're trading. Only trade with your own funds that you can afford to lose. And I am not a financial advisor. This is not financial advice. I'm a lawyer, not a financial advisor. Okay, guys, with that being said, in today's video, we are going to talk about avoiding trying to find the low, avoiding trying to find the high, and common pitfalls. And I think that there's some real wisdom in this, guys, so buckle in. Interview with CNN. In an interview with CNN some years ago, again, this is from The Best Loser Wins by Tom Hugard. I highly recommend that you buy the book, buy the audiobook, and support Tom Hugard on his Telegram channel. In an interview with CNN some years ago, I was asked about the traits of winning traders. In this very candid interview, I highlighted a few points that I felt differentiated the winning traders from the losing traders. So again, this is the difference between winning traders and losing traders. It's one of the differences, guys. It was based upon my experiences of observing millions of trades, millions of trades. So I want to highlight that because again, Tom Hugard was on the broker platform. He could see the trades come in, millions and millions and millions of trades. You are probably making this mistake yourself. By retail traders, that would be you and I. While I was on the brokerage trading floor, here are the main differences I identified. Number one, trying to find the low. When the market is trending lower, whether intraday or over a longer time frame, whether intraday or over a longer time frame, I think that's important, guys, because it doesn't. Okay, delete that one. Doesn't matter whether it's intraday or a longer time frame. There seems to be a tendency for retail traders to attempt to find the low of the move. Whether that is out of a desire to buy cheap or because they use ineffective tools, I simply do not know. What I do know is that this trade is immensely damaging to anyone's trading account. I want to highlight that. It is immensely damaging to anyone's trading account. Winning traders seem to be much more trusting, guys. Notice that. Much more trusting of the prevailing trend. This attitude adjustment may seem trivial, but it literally makes the difference between the winning trader and the losing trader. Over time, the losing trader will repeat his distrust in the prevailing trend and will take positions against it. He will do so from an emotional standpoint because it appears as if he is buying a market that is cheap or selling short a market that is expensive. This is emotionally satisfying, like buying a toilet paper at 50% discount from the local supermarket. But the financial markets are not supermarkets. There is no cheap, there is no expensive, there is just the prevailing price. The winning trader, however, is not emotionally attached to the idea of cheap or expensive. He is focused on this moment right now, and in this moment right now, the market is trending, and he trusts this trend and can unemotionally join this trend without internal discomfort. Number two, trying to find the high. The opposite also holds true. When the market is trending higher, traders tend to want to find a place to sell short. Although it must be said that people are generally better at jumping on board a market that has already risen than they are at jumping on board with a short position in a market that has already fallen significantly. If the market has moved higher by a significant amount, especially in the very short term, retail traders tend to want to fade the rising prices, i.e., they tend to look to establish short positions. Again, this is probably a result of a distorted view of things being cheap and things being expensive. Number three, Thinking every small counter move against a trend is the start of a new trend. I have sat on the trading floor in the darkest days of the financial markets. For example, 15 September 2008, when Lehman Brothers was declared bankrupt, the Dow Jones Index fell 4.5%. Throughout that trading day, there were two attempts to rally. Both failed. It was tragic to see how many clients tried to buy the low of the day only to see the Dow move lower and lower. Whenever there was a single candle, green candle in the 5-minute chart, we saw the buy order flow into our position monitors on the trading floor. It seemed as if the clients were possessed by the notion that a low was near and that they had to be the one buying it. The low did not come that day, nor the next day. This is a common trait among traders. Yes, it is. It's very common. They think that every single little counter reaction against the trend is the beginning of a new trend. Highlight that, guys. You're probably doing something like this. I know that I do. More fortunes have been lost trying to catch the lows in a falling market than all wars put together. It seems obvious to me that newcomers, and probably also some seasoned traders, profitable or unprofitable, believe that successful trading is all about charts. That belief is a detriment to their accounts because no one ever took the time to tell them otherwise. No one told them or thought to tell them or knew enough to tell them that actually focusing all your times on your charts is a mistaken strategy. Okay, guys, that is all I'm going to read directly from the book because you need to go buy it yourself. This is copyrighted material. My commentary on that is this is probably the number one mistake that I make in my day trading. When I'm day trading, I think that this is my number one mistake. All right, guys, let's head over to X now. And let's take a look. All right, guys, this is from me, R Trades X. Trading technique reminder. It is a common and easy mistake to see every small counter trend as a reversal. Your instincts want to tell you that it is safer to trade in the opposite direction, especially after a new high or a new low is formed. It feels comfortable buying a market that is already down and comfortable selling a market that is up. But in trading, you must be comfortable trading the prevailing trend. That reversal that's forming is almost certainly a pullback. Trust the trend. Wait for the market to clearly reverse before trading in the opposite direction. Okay, guys, I want to give you some examples of that here from the NQ. I want to give you examples of how you can trade in the direction of the prevailing trend by using the market replay function. Okay, guys. So we're going to go through. The market has been down a lot, as everybody knows. And all right, we're moving forward. So guys, the trend, if we watch the market here on market replay on the NQ, we can see that the trend has been generally trading down. What does that mean? That means we want to avoid trading in the opposite direction of the trend. So for example, I would not have traded this move. I would have waited for the market to either clearly show that it's reversing, or I would have waited for the market to take a short position. Okay, guys. So as we can see, as the market comes down, this, if you take a long here, you're running a big risk. So that's that 5-minute green candle. These are the kind of candles that I have to caution you. Sometimes it's going to work. Sometimes you're going to hit a decent reversal. A lot of the times, guys, you are trading against the trend and you're going to hurt yourself. So let's see in this example. If you try to go long there, you lose and you get stopped out. So again, the market goes down further. This may look like an excellent time to take a long. I'm going to caution you again against taking a long because the prevailing trend is down. And guys, I am done trading reversals in my life. All right, so I don't trade reversals anymore. I wait for the market to clearly reverse and then move in the opposite direction if the trend is going to change. But I wait for the market to definitively tell me that the trend has changed. So again, taking that 5-minute candle, that might look like a good long there, but you're going to get punished again. All right, so now we can see that the market is moving in the opposite direction of down, okay, starting to chop a little bit. We're going to come down, we're going to form a new low. This is another example where if you would have bought the market here, this would have been a dangerous place to buy the market where I'm highlighting. So that single 5-minute green candle, that would have been a dangerous place to place a buy order. All right. So again, we're seeing some pops higher, but all of your real opportunities are on the short side. So let's say that you're trading an ICT strategy. What would be an example of what would be going on here? Number one, we've got an order block here. You can trade the 50% of that order block. All right, that would have gotten you in on the short position there. Also, notice there's a fair value gap here. And you could have gotten in on the short side, guys. So whether you're trading, no matter what system you're trading, it's going to work better if you're trying to trade in the direction of prevailing trend. All right. So again, we go down further. A lot of you would have been tempted to buy the market here on that single 5-minute green candle. Is exactly what Tom Hugard talks about. But all of the trades today, this was on Friday, were down. All right, so the market, again, you can see another attempt to rally that failed. Let's say you're just trading a basic trend line. You can see that the market has been trending down. Okay, we're going to end up closing at the low of the day. So again, if you're trading ICT, that's a fair value gap there. That would have been a good place to enter short. Fair value gap here, good place to enter short. 50% of an order block, that would have been a good place to enter short here. That's if you're trading ICT. The point being is, guys, are there some examples where you can make money trying to trade in the opposite direction of the trend? Sure, you can. But you have to be very, very careful, especially with these green candles that are in the middle of a move down. So we have a move down. You've got some green candles in the middle of a move down. These are going to trip you up immensely. Well, that's what I'm trying to say, is that these are going to trip you immensely. Even at the very end of the day before the close, the market made a green candle. Green candles on the way down in a downtrending market. Look, pull back here. These are the things that you have to be careful for, because you're going to want to buy these unless you start trusting the prevailing trend. Okay? That's the point. So look at these green candles that are on the way down. Look at all the times that the market is trying to change the trend and it ends up going in the direction of the trend. Yes, you have points where the market makes a strong counter move, but trying to trade those is like trying to trade against the tide in the ocean. So big green candle on the way down. That's why, guys, I do not trade reversal setups. What do I mean by that? Anything that even smells like it's a reversal setup, I don't trade it. I wait for the market to clearly show that the trend has changed before I trade in the opposite direction. Otherwise, I'm just waiting for a new trade in the prevailing direction of the trend. Okay, guys, I hope you've enjoyed this video. This has been another trading strategy video on our trades. Please make sure to like, comment, subscribe, and engage with this post on X. Also, guys, use my affiliate link, Apex Trader Funding. It's a prop firm. See if you want to use it. Affiliate link in the description box below.